Heather, we're together again for another exciting episode. It's good to see you.
Yes, it's always good to see you too, Joe. And I'm excited that Shirley is joining us. Shirley Koss from our team is joining us today too.
That's correct. She's going to be here for the member spotlight segment. So, to kind of run through it for everybody, we're going to be covering current events, some happenings in the accounting space. Heather and I are going to extract our favorite TV and movie quote of the week from the movies and TV shows we've been watching, with a word of wisdom and guidance for accounting professionals attached there. Sometimes we pick it up in the strangest places. I actually quoted Hannibal Lecter, I think, a couple of weeks ago. Excellent things we learned over the last week, because we're always learning. Our member spotlight, which Shirley is going to be covering for us today, is one of our coaches over here at Woodard. Heather's going to pick her favorite Woodard Report article of the week, and then we're going to wrap. So let's get started. What's happening, Heather? What have you seen out there in the accounting space that's newsworthy?
So we're in January, and so tax season officially, I believe, begins on January 26th per the IRS. And so they announced late last week, that that Free File is available again this year. And while Free File has been around for quite a while, what it is it's a program where taxpayers that meet a certain lower threshold of income can file their tax returns for free, right? For some of the big tax tech companies that shall not be named. And so about 2 years ago, the IRS launched what was called Direct File, right? And Direct File was actually a proprietary software on the IRS site where taxpayers could go and file their returns directly with the IRS. Now, there's been some lawsuits out there, Joe, about the Free File. If you go back and Google that, you can find some information about that. And there's been a lot of controversy around the demise of Direct File and Free File, and kind of how that came about. But really, what happened was the IRS got rid of the Direct File. We actually it was in one of our In the News segments, even though year over year, they saw a huge increase in its use. So for the taxpayer. So this was definitely, in my opinion, just reading the articles about it, it was a good thing. It was starting to gain a lot of momentum. And then they pulled the plug, and then with lots of fanfare, they just released this press release saying, "Hey, go use our Free File program," which really is just directing them to those other tech companies.
So, yes, I believe the program is definitely helpful for folks that struggle with preparing their tax returns and being able to afford to do so. So, with that statement, in full sympathy with that statement, I like the fact that there's a third party sitting between the IRS and the taxpayer. What I would like to see is some way that people who can't afford even the services of, say, Liberty Tax or H&R Block or QuickBooks Live, which are very affordable,
Mm-hmm.
even those that can't afford those level of services, um, let's help them out with some sort of a subsidy, that a tax rebate or something, where if there's an external PTIN and your AGI is underneath a certain level, you get a tax rebate to
Love
cover the
that.
cost of preparation. There got to be other ways to redirect those funds to help out the poorest of Americans. But
Yeah.
I'm not sad to see this one go, only because I don't like the IRS being both the rule maker and the governor of those rules, judge, jury, all wrapped up in one package. It feels a little lopsided in the IRS's favor.
That's a really great point, Joe. And the other thing that I would mention is there is Vita, right? Am I pronouncing that right? Vita, which is the free service that you typically, I think they're sometimes that are at a library. You can go to different places, and tax preparers volunteer their time for low
That's
income
another great
tax.
resource. Yes.
Yeah, for low income taxpayers to get help filing their returns. So, so there's lots
Right
of
now, there's
options
more
out
like
there.
charitable independent vehicles, but I would still love to see. I mean, it's really easy to take all the money you were spending on Free File and redirect it into some sort of it doesn't take much,
Yeah.
$100. and you can offset the price of getting H&R Block to help you prepare that return or whoever you use.
Yeah, and I think that also helps out, the small practitioners, right? If they did offer some kind of a rebate on your tax return for that, that would help to build business on smaller tax
Mm-hmm.
shops that are looking to build their practice and their clientele. So
No,
I
the
think that
rising tide raises all together while
Mhm.
maintaining the arm's length independence, because the IRS didn't pay me to prepare the return. They provide a rebate to my client arm's length from me.
Love it.
So the client paid me. Seems independent,
It
um,
does.
while still taking care of those folks that need that help and can't afford it. So there are
Absolutely.
my thoughts. I'm not going to shed tears over the loss of that program, but as long as there's something that comes in to fill the gap,
And
and
there is.
I'll
And
add
there
that as
is.
long as there's something to fill the gap. So in my news, RSM launched its own generative AI tool called Ask Luca. I think it's very interesting that they picked the name Luca. I'd love to know kind of the background on that. I want to think it's about the little boy in the cartoon that's both a fish and a human, right? Because maybe it's like pretending to be a human. Luca is, but I don't know if they were that tongue in cheek with it. It could be a coincidence. It's probably an acronym, knowing accounting firms. But Luca is not just a generative bot, a GPT. Luca is the larger category of RSM's AI strategy. So there's a link in our listening guide, and I would recommend that you all pay attention to what RSM and some of the other top 10 firms are doing out there. You might say, never affects me, I'm not a CPA, or never affects me, I'm a boutique or smaller independent CPA firm. What the gods do on Mount Olympus is no business of mine, but it is the business of yours. They spend millions of dollars on research and development. They set directions that both create and reflect the future of the profession. And you get to sit in the stands, pop popcorn, and watch all their hard work and see where the future is going. So, read it, pay attention to it, watch it. Now, this top 10 firm, RSM, with their Ask Luca, it is a generative AI. So it's like a chat GPT. It can only be used by RSM auditors. It
Mm.
is heavily governed, intensely secured by RSM, and it is only referencing the internal work papers and documents of the RSM clients. So, very controlled data set, almost zero, I don't know what they're claiming, hallucination rate, very privatized, very controlled. And this gives me the opportunity to talk about, as you're looking at this AI category, you have to think about AI always with two different legs of the stool. There's the ability for the AI to mimic human thought, and mimic is all it can do. Then there is the data that it is using in the mimicking process. Think of it as your brain. Your brain has brain cells that fire neurons that create thought, but a brain with no knowledge in it is just an empty vessel. You just basically, that person just stares at the wall. So AI is only as good as its data. And here the data is a privatized, extremely controlled container. Now, I think, Heather, we're going to see more and more of these kinds of technologies emerge in the space, both in firms and in industry. For example, these native AI apps, they're doing that with their general ledger data. When you go in and do financial analytics, the container is completely controlled to your general ledger data. It's not presuming things based on other people's GL data. What mighta, coulda, woulda, shoulda been the way that you set up your chart of accounts. It's dealing with the hand you've dealt it, your controlled data source, unless you want it to go out and look at
Yeah.
benchmark data. And that kind of control gets that, what they call the hallucination rate, down to zero or near zero. All right, thoughts on all that?
No, absolutely. And I think we're seeing technologies now that are, definitely built on that GL data, but also are allowing you to pull in additional data such as, Shopify data, your data obviously, but pulling in other, Shopify data, Google Analytics data so that it can actually start to cross-reference these different data sets. And I think we're going to see more and more and more of that, which is really exciting. So yeah, with RSM, I think we are going to see these, proprietary AI platforms pop up within these large firms. And then I think we're also going to see what a lot of the firms are doing as far as coming up with this technology and then figuring out a way to monetize it and spread some of that goodness to smaller firms. So it's gonna be really fun to watch how this kind of evolves and how it gets democratized across the industry and the profession.
Yeah, it is. It's going to be interesting to watch. All right. It's time to move on to the TV movie quote of the week. All right, Heather, I'm really interested in yours because I just watched your movie too. But tell us what you watched and tell us what you extracted out of there.
Yeah, so I am a big fan of the Knives Out mysteries. So I just watched Wake Up Dead Man, which is the latest one, and it actually is based on it's based on religion, right? On a priest that actually goes to a small community and gets tangled up in this murder. And it was really, really, really good. Unfortunately, Joe, I kind of have this ability of figuring out who done it within the first 5 minutes of a movie.
Well,
So I had
with our
actually called
record on
it.
the two truths and a lie, where you're kicking my butt, I think that discernment. I've seen it before.
Within 5 minutes, I watched it with my mom, and within five
And you
minutes, I'm
really
like,
knew who did it within the first 5 minutes, really? I
I
mean,
did.
of the
I did. I
murder.
was like, that person did it. And sure enough, that person did it. So, of course, the way that it kind of unfolded, and I'm going way off track here, the way it unfolded, I didn't know, but it
And no
immediately
spoiler
was like,
alerts here. We are not going to tell you who did it,
no,
so
I'm
you'll
not
have
going
to
to tell
turn the
you who did
volume
it.
down.
No.
Yes,
And it is so worth the watch. That it was so well done.
it is
I
brilliant.
loved it. So this is at the very beginning of the show. So Father Judd is speaking to a superior who, his superior was actually in Westworld, which is another show I loved. Right.
He
But
was
anyway,
Thanos too in
yeah,
the Avengers series. Yes.
that's right. That's right. So he's speaking to him after he has just punched a deacon in the face. And they're having a conversation about this because obviously he's in trouble. He's a newer priest and he's afraid that he's going to be kicked out. Right. And so the superior's asking him about it, like what happened. And he said, well, I used to be a boxer and I lived on the street. And the other priest says to him, a priest is a shepherd and the world is a wolf. And his response to that is, no, I disagree. I disagree with that. If you start fighting wolves, and this is the quote, is you start fighting wolves, and before you know it, everyone you don't understand is a wolf.
Hmm.
And I loved this because how easy is it when we become rigid about what we think and believe is true in our own experience that we start to shut out the truths of other people, right? And
Yes.
so it's so important to keep an open mind and lead every interaction and every piece of new data and information with questions rather than reactions. And
Yes.
that keeps you from turning everything into a wolf. And I mean, to apply this to business is that, we're looking at new technologies, change management's really hard. And we have to constantly remind ourselves that our aversion to change is seated in fear that was caused by things that happened earlier in our lives. And
Hmm.
so, if we can just consciously acknowledge that and realize that what we're reacting to isn't the thing that's in front of us, what we're reacting to is something that happened in our past, that we can start to look at it through a new lens and start questioning that.
And
So,
the person that we are observing, their behavior is something that is bigger than what we can see on the surface. I love your
absolutely,
ask questions because why is a motivator? Why is an inoculator of judgment?
absolutely.
The client's not getting me the source documents month after month after month after we've been through this. All right,
And,
judgment, they
and
are horrible, disorganized, and don't respect me. Question, why is this happening? Right? Now, the answer could be that they're disorganized and disrespectful, but you're going to get there through the proper process, right? And then I'm often surprised that it's not the first thing I thought once I ask the question. And by the way, you have to go to the
absolutely.
client and ask the question. That's the only way where you're going to find out the answer. So I absolutely love that. I could say so much more about that movie, and I may actually pick it for a future quote because there were
Yeah,
so many goodies in it.
so many
But I
goodies.
will just go ahead because I know we're over time on the segment, but I've got to say it. My favorite scene in the whole movie is when one of the parishioners is sitting in a room in the church, and there is over his right shoulder, there is a picture of Jesus hanging on the cross. And the words that come out of his mouth are, we as a religion have to stop just taking it. What are we going to do? Just lie down on this thing? We've got to fight back. You never win a war unless you fight back. And I'm like, the irony in that, that Christians believed that the war was won by Jesus dying, and here you are saying we got to swing back. It's and it was so subtle.
Yeah.
It's not like they telegraphed it. They didn't explain it with a footnote. The listener just had to pick up on that little irony. The watcher, and it was quick.
Such a great movie.
Oh, boy, yeah. I picked up on the irony really fast. Yeah. Okay, so mine is Your Honor, and I watched Your Honor years ago, but I'm making my way back through it, partly because our company is going to the hotel, the Baxter Hotel, which isn't called that in real life, that was owned by the Mafia family. That's where we're going to be having our offsite in January 2027. So I'm intrigued to see all the shots and the scenes and things like that they use in the movie. And it's rewatchable. But the premise here, without giving anything away, is that the judge's son, His Honor, the judge's son, secretly breaks a law and gets in trouble with both the crime family and with the law, or if he were to be caught the law, at the same time. It puts the judge in this spot. And in this situation, in this pressure cooker, the judge says of the situation, I would do anything for my child. That's what scares me. Right? I would do anything for my child. That's what scares me. Now, anybody that's a parent understands that parent-child emotion of this, but really anybody that has anyone that they love and love deeply understands the power of this, right? So moving it to the business principle, just like it's only natural for a child to protect a parent to protect a child, it's also natural for a professional to protect their client. You want to feel that sense of protection. Maybe not parent-child, that's where the metaphor breaks down, but in a lot of ways, it is still coaching, it is still nurturing. There are components that overlap in a Venn diagram between parenting and being an accountant, serving your client. The question we have to constantly ask ourselves, just like the judge had to ask himself in the show, the internal debate is, how far do we go? Our natural inclination to protect the client would carry us too far if we don't check it, right? When does it cross the line? And where I have found a good spot, obviously there's a scope in nature you should monitor, but that's all solved with money. Assuming the client wants to give you more money because the scope increases, and give you more money because the nature evolves. And that's a big assumption we can deal with in a whole other episode on pricing and scope management. Let's just assume the money's working out. The economics are there. There's still a line you can cross even if they're paying you enough money. And the line is what the psychiatrists would call codependency, which I've said this many times on many episodes. I have to dispel the myth out there in the zeitgeist of society in America. We think codependency means two people are dependent on each other. It is implied in the word. But that is not the clinical definition. The clinical definition, now listen to this if you suffer with going too far with your clients. Listen to this clinical definition, listeners. The clinical definition is, I take another person's problem, I make the other person's problem my problem, and then inadvertently enable them to continue in this bad behavior. If they're an alcoholic, I make their alcoholism my life struggle, my life problem, without the proper distancing. And in doing so, I might pay their bills, put a roof over their head, overly sympathize with their need set. I might be paying their electric bill, not realizing that the money that they didn't use for the electric bill, they're buying alcohol. And me making their problem my problem enables them to perpetuate this bad behavior. Now, I'm guilty of that as an accounting professional when I practiced. I'm guilty of doing that with business owners. If you're guilty of that as a listener here, there's no judgment attached to it. It's just a warning cry. Don't be like the judge in the show and go too far.
Okay. Yeah.
Thoughts, Heather?
100%. I mean, I've definitely been in codependent relationships with clients, and it's a fear thing again, right? It comes down to fear. It comes down to rejection. It comes down to lots of different emotions, and so that's the thing. And I know you're a big Spock lover, and the complexity of Spock. That'll be another one, but is being able to look at the emotions that are coming up in every situation and understanding them for what they are as a physical reaction rather than just the way you are, right? So yeah.
You brought up fear, and I have to hang on it for just a minute. There are three key things we fear, in my opinion, in life. We fear insecurity, we fear insignificance, and we fear poverty. And I don't mean that in the financial sense. I mean in the destitute sense. Like we have no power to act. A poverty of emotion, a poverty, yes, of maybe of money in our pocket to actually function in life. A poverty psychologically, if we had dementia or something like
Mhm.
that. So I understand poverty with a capital P. These are the things we fear. These are our core fears,
What are
and
they again? Can you say?
they're my opinion, right? They're insignificance, insecurity, and poverty. Poverty with the capital P, or at a global understanding, not necessarily just economic. Um, and so when you're thinking about this codependency, we're bringing those fears to the equation. I am now
Mhm.
significant because this
Mm.
successful business owner is making me integral to their survival as a business. That means I'm significant. I'm secure. I'm making a lot of money, and this relationship is stabilizing things. And then when poverty, yes, there's the economic side of poverty they're helping to curb, but it's the opposite of poverty. I feel empowered. I feel empowering, right, in order to serve this role with my client. Now, all of these are noble. The problem is they are all the conduit to both healthy and unhealthy relationships with clients if you don't stick the boundary, the crossing point in the middle between where am I empowering the client and enriching them, and where am I enabling them and their bad behavior at the expense of myself, my family, my health. And ironically, it turns into an impoverishing effect. There's like a bell curve on it where I go from being empowered to impoverished as I follow them down that other end of the slope. It,
Which
it,
is
it is all subjective. It's hard to
It
measure.
is. And it's why Ideal Brand, which used to be Ideal You, is the cornerstone or the foundation of all the other ideals, because you have to set who you have to understand, you have to dig in and figure out as your practice who you are, what is it that you're looking to make a change, what is the big thing that you want to change in the world, right? And what is the higher principle that you follow, like you always say, Joe, right? So if you don't, that really sets the guidelines and the guardrails for all this other stuff. So when you're in a situation where somebody is pushing a boundary, you know the answer because you've
Hmm.
already taken the time to think about it, and it takes that emotion out of it.
Yes.
This is how we do things here. These are my non-negotiables. There's no emotion attached to that. You might feel sad about it. You might, feel a little bad about it, but it's you've got the guardrails there, and that takes the
Yes.
emotion
Understand the
out of it.
nature of your role. What's my
Right.
swim lane? So I'll just
Exactly.
end it on this because I say this all the time. There's an endless vacuum of human need. It is not your job to fill it.
Mhm.
And the cautionary tale of your honor is even with your children.
Mhm. Mhm.
It's not your job to fill 100% of your child's needs. That's
Yeah.
actually harmful to the child. It's called helicopter parenting. There's an endless vacuum of human need. It is not your job to fill it. So, okay, we could hang on that forever, but let's get to the excellent thing we learned this week. All right, Heather, what did you learn this week?
So I was having an interesting conversation with a friend of mine who works in academia, and we were talking about AI. And they were sharing with me, grading papers and having the AI written papers, and how that just the world has changed in academia from, what people are actually, students are actually, creating their work, right? And so I asked the question about, so how do these universities and colleges, set the the guardrails or the policies for AI use. And that was a really interesting conversation because what I was told, and then I researched and found is true, is that really colleges and universities are doing a hybrid approach, right? And they vary across all colleges and universities, right? So if you go and look at how Harvard treats it, it's going to be completely different than how NYU, right, treats it, and what their rules are. But really, at the end of the day, most of them are doing some kind of a hybrid approach where the organization or the institution is setting certain parameters based around, safety, right, privacy, tool access, and integrity standards at a very high level, right? And they're delegating the rest of it, the actual practical application, to the professors. And so the reason this was the excellent thing I learned is that, we're thinking, or we know in our profession, that it's the Wild West in accounting on, do we have a policy? There's really no governance, or there could be.
There's no governance within the profession or
Right.
from the United States government. I mean, Europe is way ahead of us on regulating this. Sorry.
Yeah, exactly. So, how does that, and so the thing is that on the on the professor level, they decide what's allowed for their assignments, how students must disclose and cite AI use. But what it comes down to is funding, right? So if we have a student, if we have all of our students that are using AI, and every student in a class uses AI, and the professor says there's no AI use in these papers, do they fail every student? And then what becomes the battle of, if I fail every student, now the student's going to go and file a complaint with the organization. There's going to be a big fight. And based on the funding of the school, because we've also had funding removed from schools recently, what happens. So it's interesting that we have the same issue in our profession, but it's all the way down to where all of our next generation of accountants are coming from.
Yes.
They're in the Wild West too. And there's not a lot of guardrails because we don't have a standard, right? So anyway, I read an article by EduCause that I'm putting the link in the reader notes so you can go read about it. It actually is written for educators to figure out how to set policy, right? So really great, but fewer in this. They did a study in 2025, and they found that fewer than 40% of institutions that they surveyed had AI acceptable use policies as of spring 2025.
I can believe it.
It's
because
crazy.
how do you even write a policy when you haven't figured out or mapped the problem yet? So you mentioned NYU. My daughter happens to go there, and their policy is it hinges on disclosure. And if you think about it, the underlying principle of this is no different than when we were in college and we didn't have AI. We went to the library and used the Dewey Decimal System to go find our books. We had to disclose our sources.
We did.
And the level of dependency on the sources. And we weren't allowed to plagiarize. We weren't able to there was no copy paste right then. You had to actually type real fast. But we weren't able to just type big sections out without putting it in quotes, without documenting it, putting it in the bibliography with the footnotes. So it's the same kind of disclosure accountability. It's just now they don't have to go to the library to get to everything that the world has to offer. And they don't have to type real fast, or even things can be rewritten. So the kind of the next step is the source of ChatGPT and its sources have to be disclosed. My daughter has to disclose that. And any assistance that she had in actually producing the schoolwork has to be disclosed. And failure to disclose is considered a breach of the honor code. Now, when they disclose, if they're over deploying AI, then they probably don't call it this in academia, but it becomes a coachable moment for the professor to the student.
Right.
Don't over rely. Now, what I like about that approach is, first, it tames the untamable because it's subjective and it's not a mapped problem. Second, I believe that if we were to compartmentalize, this is 100% not AI, this is 100% AI, or this is or isn't using AI, I don't think that's preparing college kids for the future. I think the future is going to be bionic, and everything that humans do is going to be informed by AI. I think increasingly uh, in real time, reading from our smart lenses. So, how we present ourselves is, are we being disingenuous? Hey, I have a great idea. Okay, well, I just saw your fingers on the keyboard in the web meeting. You didn't have a great idea. You asked ChatGPT, so don't pretend. You know, so I think as long as we're honest with each other, then I think that we maintain integrity. But
Yeah, and I think that the shift is, I mean, more and more universities are actually teaching AI, right? And they need to, if they
mhm.
haven't already put in a, you know how they have like there's zero level courses that every student has to take. I would hope that every college university has an acceptable use of AI
Well,
course that
please
they're
tell
teaching to
me they
every
do.
student.
Yes.
Yeah,
Well,
and if they
that
don't,
they
they
will.
should.
Yeah, they should. Okay, so in mine, I reread The Jolt Effect. I had read it originally, then I signed it to certain members of my team, those that had to jolt people into action, coaches and salespeople read that one. So I was rereading it, and it's a powerful book. I think everybody in here should read, because either you need to jolt your clients from inaction to action as an advisor, or you need to jolt a prospect from inaction to action to get them to engage you. So you got a double reason to read it: accountants, bookkeepers, tax preparers. But the whole concept is overcoming this problem of inaction. It's not that our clients are taking the wrong action; they're just not acting at all when it comes to accounting, financial measurements, business leadership, tax compliance. We have to constantly be the force of action on their behalf. So how do we jolt them into action? Now, it does take it from a sales perspective. You have to apply it from an advisory perspective. But in the book's sales analysis of 250 million, that's with an M, sales calls analyzed by artificial intelligence, it found that people did not make a choice. They did not act because they lacked information or thought they did. Paralysis by analysis, right? They either didn't have information or didn't have all the information they could possibly want in the fear of making the wrong decision. So they lacked or thought they lacked information. They were not convinced on the return on investment. They were afraid to make a mistake, which I know sounds like just a synopsis of the first two, but the book breaks down how it's a lot easier to make a mistake by not acting than it is to make a mistake by acting. So a simple example of this is, if I'd never joined the gym, then I don't feel the acute pain of wasting my money. So the passive mistake of not joining the gym, well, I don't deal with those consequences for 10, 15, 20 years, right? And then I even get a little bit of a positive reinforcement for negative behavior is I don't spend the money and I don't have to go down to the gym and work out. So, that's the inaction that would say, hey, I'm better not doing anything at all than taking the risk and going down and joining the gym. Well, that's exactly how your clients are perceiving you whenever you're trying to upsell to financial advisory, to controllership services, to help them guide their company. Well, making no action at all is safer than engaging you and making a mistake, wasting my money. So what we do in each one of these situations, if there's a lack of information, listeners, you simplify the choices. Now, I made a sale recently where I'm helping a software developer. It's a $60,000 annual engagement, $5,000 a month. So let's just take this as a hypothetical and break it down. I mean, this is all new. I kick off today, this afternoon, with them. So I was meeting with the founder late, mid December, and it was time to make a decision. So we had talked about the value. They had already determined the return on investment. So I'd already covered that with all of my math coming into this meeting. I had to deal with the lack of information and making a mistake. So with the lack of information, I just made it very simple. The way we engage is this, it's this per month, and I'm on your team. And if you want me to jump into 3 or 4 meetings in a single week, okay, we're going to have a conversation about boundaries and scope and nature, but I'm here. I simplified the choice. $1 amount, one simple nature, Joe jumps on my go-to-market team. Then what about the fear to make a mistake? Well, I had to mitigate the risk. It's an annual commitment. It's a $60,000 purchase. I might be convinced of the ROI, but what if we get into this thing and I realized that this wasn't the medication I needed, right? So I mitigated the risk by saying, yes, it's a 12-month agreement, but you have a one-time 90-day exit ramp. If this was not what you were thinking it was, take the exit. And that was the last thing I need. I watched the body language of the person just kind of calm down. Everything was fine. Recognition hit their eyes. I knew at that moment, the second I send it, they were going to sign it. So you simplify the choices, make sure the ROI is clearly on the table, mitigate the risk. That's in the Jolt effect. And a link is in the listener guide for you to go read it for yourself.
That was a great book. I was one of those team members that was assigned that book to read. And I agree with you that it's, and to kind of the afraid to make the mistake is that if you make that, what they have found in the research, and they talk about this, is if you make a mistake, then there's finger pointing. And so if you don't make the decision, they can't point the finger. It's,
yes. As I point fingers in agreement. Yes.
Exactly.
Okay.
Exactly.
Right.
So love that. I love that. And Don Brolin, our good friend Don Brolin, she talks about how she implemented this in her practice with the relationship pricing. And she did exactly that, Joe. She said, she simplified it for him. You get me and I'm there, right? Just exactly what you said. So I love that.
All right. So go read that book, go read that article. And it's time now to move to the 2 truths and a lie. Now, Heather, we haven't officially been keeping score, but I would say it's safe to say you've been kicking my butt on this. I think maybe I've gotten you once, maybe, and I think you've gotten me almost 90% of the time. So I'm hopeful today I'm going to stump you, but I'll let you go first. Now, for those of you that aren't familiar with this segment, Heather's going to tell me 3 things. One of them is not true. On our honor system, we do not review these in advance or research the answers. I haven't even read what she's put here in the notes yet. Okay, go ahead, Heather. Tell me what they are.
Okay, so I'm on an AI theme this time. So a federal law called the Take It Down Act was signed in May of 2025 and targets non-consensual intimate images, right, including the AI-made digital forgeries or the deep fakes that you've heard of. And it gives covered platforms until May 19th, 2026 to set up a notice and removal process.
Okay,
that's thing 1. Thing number 2, Colorado's AI law, SB 24-205, was originally set to take effect on February 1st, 2026, but a later bill pushed the effective date to June 30th, 2026. Okay. And thing 3, the U.S. already has a single comprehensive federal AI act, similar to the European Union's, that sorts AI tools into risk tiers and applies the same rules nationwide. And it overrides all state AI laws, which is not making states very happy.
Okay. So I don't know specifically about the Take It Down Act when it comes to all sensual acts. I do know that there are already laws that protect children from these forgeries, but I'm going to just go ahead and say, okay, we got one. We're going to protect all humans. So I'm going to just assume thing 1 is true. I don't know what California AI law says, SB 24-205 is, or whether or not it was delayed. So just going to hope that you didn't try to throw me off with the letters and the facts there. I know for a fact that we're way behind the EU. Brown taught us that in our AI course. I'm assuming we are still behind the EU because the sentiment of a lot of people leading on this category on both sides of the political aisle is it's an AI war, and under regulation is essential to us winning against China. And if we go the act of the EU, we're basically surrendering in the AI race. So I'm going to say we do not have a single comprehensive federal AI act because that would be counter to the sentiments across the political spectrum right now in America. All right. So number 3 is not true.
And you got it right.
Okay.
That is correct.
All right. So, and that's an interesting debate too. EU is protecting their citizens better, but basically surrendering the AI race to the United States and China at this point. So there's no right or wrong answer. It's just a debate. All right. Here are my 3. They're also related to AI. All right, but very specific mechanical practical applications in my case. All right, so number one, AI can read client contracts with billing schedules and automatically set up recurring invoices per the contract in the general ledger systems, including allocating revenues to specific departments and, if needed, automatically accruing those revenues, realizing the revenue in the period in which they're earned without human interaction. All right, that's number one. Number two, cutting edge CAS practices using native AI general ledger platforms like Digits or Puzzle regularly see at least 10% of their bookkeeping work each cycle fully automated by these solutions. And I'm sorry, at least 90% is what I was supposed to say. And then, so at least 90% of their bookkeeping work cycle or workload reduced down to 10%. So, all right. Then number three, there are over 100 GPTs specifically designed for the accounting profession using OpenAI. So Tax GPT would be an example of that, but there are over 100 of those that are just for us. Okay. Which one of these is the lie?
So thing one, you would think would be the lie because it's so specific and gosh, you would think, there's no way AI can do that, but I think it can. I think with agents that it can totally go and do all that. So yes, I think that that's true. I think thing two, I think that's the lie. I think that we're not quite to the point where Digits or Puzzle can do 90% of the bookkeeping load each cycle. I think we're, maybe one or two clients, you could probably get to that efficiency, but I'm guessing they're still a little bit further away. I think the number's probably a little lower. I think they're headed in that direction, but I don't think they're there yet. And I totally think there's over 100 GPTs specifically designed for the accounting profession using OpenAI.
So you nailed the lie, absolutely. And the number is in, depending on who you talk to, is in the 60 to 70% range on the average, varying from client to client. Digits actually has created the claim we've produced the first human-free bookkeeping cycle month after month for a particular set of clients under
Yes.
a particular set of circumstances. So they kind of planted their flag in the moon. That doesn't mean we've colonized the entire moon. It's one person, one situation, one flag. But if you're playing to the averages, you're dead on. The percentage is the thing that's untrue here. It's more like 60 to 70%, depending on who you talk to.
So we didn't stump each other. We tied.
Yeah, there we go. We tied today. And for that first one, not only can they do that, but they can even integrate with proposal software solutions so that you don't even have to feed it manually. As soon as the proposal is signed by the client,
that's awesome.
It just puts the billing schedule in and sets it up for your review, all without human interaction. It's pretty amazing. All right, it's time to get to the member spotlight segment. Now, in this segment, one of our coaches comes on board, or sometimes Heather and I, since we're also coaches, come onto the podcast to celebrate one of the members of our coach program here at Woodard and what they're accomplishing in their practices. This time with us, we have Shirley Koss, one of our coaches. She's going to be celebrating one of our members today. Shirley, take it away.
Thank you, Joe. So actually, it's a 2-for-1. We're highlighting Jennifer Scott with Higher Effect, and she co-owns the business with her husband, Chris, which you can imagine is always an interesting dynamic, right? She founded Higher Effect in 2007 with one purpose: to create jobs helping small founder-led and family-owned businesses leverage benefits of enterprise-level HR, recruitment strategies, etc. She came from an agency corporate background, and she understood, what business owners were looking for. So instead of checking off skills lists, etc., she's really built the company on hiring not only on skills, but also aligning with company culture and core values, which we had discussed, aligns with the whole ideal brand, vision, mission, purpose. And then in 2018, Chris joined, and she refers to him as her partner in everything, which I love. And they expanded their core services to include bookkeeping, payroll, HR. Chris does a lot of the tech side, so accounting, tech, automation, business advisory, and of course, still recruiting. And since 2020, they have doubled their firm in size, and they continue to help business owners get out of the back office and back to growing the actual business. So really about people first, technology forward, combining the bookkeeping, payroll, HR, etc. They have been recognized as a top accounting and advisory service practice by Woodard 2023, 2024, and 2025. And they were also named one of America's top small businesses from the U.S. Chamber of Commerce. What I loved most about what Jennifer had said when I asked her what are the Woodard ideals that the top 3 or 4 of our 7 ideals that they've really leaned into, because they've been with us as members for a little over a year and they've tripled their revenue, which is fantastic. What I love the most about their leadership dynamic is that they really embrace the fact that accountability has to be up and down. And so no dictatorships. They have 5 directors in addition to both of them. And they really feel that it's important to strategize and scale the business and get through that whitewater that you often speak of, Joe. And the other thing I loved is understanding what burnout is and how they both handle burnout differently. So with Chris running the tech side of the business, he kind of balances out with accuracy and choosing various, tools that they're going to use, resources. And he also mentioned appropriate battles, which I thought was funny. But really, they've spent the last year redefining and focusing in on their ideal clients, their ideal services, and their ideal engagements. And again, coming back to what you had said, Heather, really leaning into the value focus and their purpose and aligning that with their vision, mission, and purpose, and fostering longer term relationships, growing through the entrepreneurial journey with their clients. And then she also said ideal process, but they're still leaning into this and it's a work in progress.
That's great. That's great. Well, the advantage of having spent quite a little bit of time with Jennifer and Chris, and they are amazing leaders. And I'm so excited to see what's happening in their practice. And anytime that they're in a room too, they just elevate the entire mood of the room. They're infectious with their excitement, enthusiasm. I bet they could win some award for best company to work for too.
Absolutely. Yeah. So. Just to add to that, when we were at our Woodard Member Summit, she was distributing stickers, and I teased her about how, the way that we make friends and encourage people is still so similar to when we were 6 years old, handing out stickers to encourage other people and build that sense of community and really carry out their vision, mission, and purpose in just little ways.
I love that. Well, thanks for joining us, Shirley. Thanks for spotlighting this amazing firm. Thanks for being with us.
Thank you.
That moves us to our final segment, Heather's Woodard Report Article of the Week pick.
Yes. So we've been busy at Woodard writing articles about AI education. And so I actually mentioned it in our last podcast, Joe, where we had talked about what it means, the education strategy for firms. Then we kind of leaned into AI in academia, right? And so this third article is AI education for accounting professionals, where we break down different resources where you as a professional can go out and learn about AI, about prompting, about the different types of AI technologies that are in the space. So I encourage you to go out and read that article. There's some great resources in there, and get started. If you haven't gotten started on your AI journey, it's not too late. You're not behind. Yes, it's going to keep moving, but this is a great time for you to just, dip your toe in and start to get comfortable with it.
Yep, absolutely. So first step is stop using search engines and start asking a GPT, because it's much more effective. And then that'll get you more familiar with the way the prompts work. Second step, come to Scaling New Heights and take every course on artificial intelligence you can, including some that we're going to offer on prompting strategies for accounting professionals. So hope to see you there in June. Big topic of our conference coming up this year. Well, that's a wrap, Heather. That's a whole other episode. We'll see you next time.
Bye-bye, everybody.